So we'll review here the Wavelets Filter page. We've chosen the DAX index between January 2024 and April 2025. And then you can adjust the wavelet decomposition level. By default, it's 1. You can move it to 2 or 3, and you start to see how the filtered version, so the green line, becomes way smoother compared to the original unfiltered light blue one, or 4. Let's try, for instance, stocks. Let's try another asset. Let's go for Apple. Again, 2024 until 2025. And so here you see nicely, it's a nice filtered version. We can even increase here the wavelet decomposition level. We can try 6. This is, and we can even go to 8. So see, and then you can also use simple moving averages if you want the 50 days in magenta, or the 20 days in orange, or the 100 days in yellow, or the 200 day in white. Now, wavelets are different from frequency domain filters that we reviewed in the previous video. Quick disclaimers: we do not give investment or financial advice. We are only sharing our personal opinions. So the first difference is that, as we state here, the current wavelet filter implementation is a non-causal filter, which means that when we filter a point at time t, we use data prior to time t, but also we have a look-ahead bias. So we also use data in the future compared to time t. So this is also why you get such a nice smooth version with no time lag delays between the filtered version and the unfiltered version. And this is something to consider if you were to use this filter for real-time trading. But overall, for long-term decisions, we have, in our experience, this was fine. The other aspect is that wavelet filters, they decompose the original signal into different frequency bands at different time scales. So that's not what is done with Butterworth filter, which only use frequency domain decomposition. And finally, the wavelet filter are really well suited to actually filter what we call non-stationary time series. So non-stationary time series are something that are very common in financial markets. So those are time series where basically the statistical properties change over time. So like mean, variance, autocorrelation are not constant over time. And then wavelet are very well adapted and suited to filter those type of signals. So that's another advantage of wavelet filtering compared to standard classical Butterworth filters, for instance. Quick interruption. If you like the content, don't forget to subscribe and share the video with your network. Now in the next videos, we'll start doing some cool stuff. We will go over all the pages within the filtering and classical indicators toolbox. So here we will review the technical analysis indicators like RSI, Bollinger Bands, MACD, and Renko bars. But we will, before applying these indicators, we will first filter the original financial time series. And then we'll see what the impact of that is. And so I think that's going to be really a lot of fun. And we will apply both the filters that we have reviewed in the previous videos and in today's video. So we will apply the frequency analysis, so the Butterworth filter, and we will apply the Wavelets filter. So yeah, please have a look at the upcoming videos. It's going to be a lot of fun. Thank you for watching, and until next time.